Hello and welcome to this week's mortgage update. Unfortunately, rates ticked up just a little bit this week, but still stayed below the 7% level on a conventional 30-year fixed rate mortgage, according to Mortgage News Daily. FHA and VA rates were hovering or a little bit above 6%, which is pretty incredible. And as mentioned last week, the FHA program has been a super popular program with lower interest rates and mortgage insurance than many of the low down payment conventional programs. So this week's market mover came off of our Monday holiday, Martin Luther King holiday, which is a great one, with one of the voting members of the Fed, Atlanta Fed President Raphael Bostic, making comments indicating that the Fed funds rate might be higher for longer. This despite the continued decline in inflation. Another Fed governor and voting member, Christopher Waller, also indicated the following day that the Fed may not be in a hurry to cut rates. And I still believe it's amazing how Wall Street can be beholden to a few comments by people from the Fed. They may know more than we do. The December retail sales report also didn't help us much, showing that the core retail sales came in at 4 times the estimates. Is that an anomaly? Is it a buy now, pay later scenario for consumers with credit card debt piling up? We're going to have to wait a few months to see if this was an anomaly and irresponsible spending by the consumer, or if they have extra money to spend due to the higher wages. All in all, rates are down well over 1% since their peak at 8.03% on October 19th last year. Additionally, Fannie Mae came out with a recent white paper expecting mortgage rates to dip below 6% in 2024. They say this should start to thaw the existing home sales gridlock created by the lock-in effect because of the low interest rates and bring some more inventory to the market, resulting in a higher number of resale transactions in 2024. Mike Simonson, president of Altos Research, a great resource to follow real estate trends, said consumers are more sensitive to changes in interest rates than the aggregate of the overall change in rates. Stability in the market is very much preferred by the consumer. In other words, if rates jump dramatically, consumers typically freeze and wait until they see some stability come back into the marketplace. And conversely, we could see a mad rush back in if rates drop quickly. Slow and steady will probably be our friend long term. Finally, the number one reason home buyers pause their purchase decision, surprise, mortgage rates. 72.1% put their home buying on pause because of mortgage rates. That's a lot of potential home buyers if rates drop below 6%. So get your buyers ready now so they're not up against all the multiple offers and likely higher prices later on this year. Hope you have a wonderful weekend, and we'll see you next week. Gaylord out.